So since we are talking about, the stocks, it is important for us to know the fundamentals of the stocks, because we should know how to read profit and loss statement. I'm not basically from the background of commerce, but I will tell you what exactly I see as a layperson, assuming that you may all not be, some of you must be from the commerce background and you understand profit and loss in a better way than I do understand. So please don't judge me about it. And I would like to learn it from you. And I will suggest you to watch, videos by good professional, people on the YouTube. They will help you in understanding fine nuances. But still, from my own eyes, I would like to tell you what I would like to see, right? So where do we check, the profit and loss and the balance sheet of a company? So go to screeners.in. Okay, go to the screener.in, and this is a place, or not this one, screener.in, screener.in, right? Screener.in, that's the company site. So this is a company, this is the site, where you get to see all the screeners, and you can check, the various companies and understand how are they performing. So let me take up a few companies and read out to you them, read out the, their profit and loss statement. So let me write first HEG. Right? I'm showing you how, what should you see in a company's portfolio and what should you see in their, balance sheet. And let's see, we have everything: HEG, charts, analysis, peers, quarters, profit and loss, balance sheet, cash flow, and the reports. Everything you get here. So first you get the market cap. See the huge market cap that it has, 14,000 crore, right? Current price is 3525 and the book value is 488. It's almost 10 times, at least 8 times its book value. The P is very reasonable, 13. It's basically, very, very attractive PE value, right? So please remember which PE is attractive. It's about 10. Single digit is very attractive, 10, 12, 13, 14, 15, but sometimes we do even go for 20, 25 PE as well. But right now here, this looks very attractive. They don't have any, they're not giving dividends at all. Face value is 10 rupee and it's listed both on BSE and NSE. You can go to the company's website from here and see what all they do. Yeah, so you can go through and see they are into graphite electrodes, right? The main business is in the graphite electrodes, which counts for 80% of the revenue, right? Then they have a power division. One of the major bottleneck plaguing the Indian industry has been shortage of power, so they are into generating power. They are having carbon specialty, right? And you can read about the company from here. What is this is the warehouse that you can see, the huge warehouse, and you can read about the company. So you can read about us. Go about what is the management, who are managing it, who's the chairperson, right? It is see here, the chairperson is Ravi Jhunjhunwala, and here you can read what they are planning. Like, you should know about everything about the company that you will be investing in. So let's go back to the screener.in. So you can directly go from here to its website. You can see the 52-week low. In 1 year, the stock has moved more than 10%, right? Almost like 12, 13% it has moved. See the huge momentum that it had. What are the pros of the company? It's expected to give good quarter. Stock is trading 7.21 times 7.21 times its book value. The company has delivered poor growth. Company has low return on equity. So these are the negatives. Then compare it with the rest of the its peer companies. So see here, the market cap is respectable with respect to each of them. Okay, so I didn't know that AIA Engineering also is in the graphite, electrodes. Graphite India, HEG, AIA, all of them are the peer companies, and it has the least PE in its peers. And quarter profit, look at the variance in the quarterly profits. Sales of the quarter is almost as good as the Graphite India sale, and quarter sales variation is 401, and of course the book value is current market price is much higher than the book value. Then I definitely look into the sales. So sales, there have been a huge growth. Can you see, to 41.86 it has grown to 1292.45. Expenses have not grown, right? And the profits from 26 crores have become 950 crores. Look at the operating profit margins, have from 11 it has become 73%. These are the beautiful things you have to see. Sales should grow, expenses should not grow, operating profit margin should also increase. And depreciation is stagnant almost for many years. Interest is fine. Profit before the tax is, look at the huge profit before the tax, 919 crores. Net profit is 634 crores. So sometime in between the company was in negative as well. For many years. 2016 it was in the negative, and 2017 onwards it has gone into positive. Look into the sales over the past 11-12 years. From 525 crores it has become 2750 crores. Huge growth in the sales. Expenses have grown, but the profits have tremendously grown, massively grown, right? Operating profit margins have also grown. All right. Other income, interest, depreciation, these are all fine. I don't care much about them, but because I'm not aware, so one has to, I look into the sales, I look into the margin, I look into the operating margin growth, and I look into borrowings. That's also something I do concern about, and I also look into the reserves. What is happening to the reserves? So see here, the reserves are growing, means company is a cash-rich company. See here, 831 crores rupees, right? They have as reserve, cash reserve. It's a cash-rich company. Borrowings have decreased. You can see, from 2006, 805 crores, it has become 684 crores, right? Total liabilities, they have huge liabilities. They have decreased it, but still they have a huge amount of liabilities. Fixed assets are growing fine, and work in progress. How much money is being used in work in progress? It's about 1.2 crores. So, but in the year 2014 and 15, they have spent a lot of money in their expansions. So now companies is expanding well. Investments. So the company is increasing its investment. Other assets are also fine, right? Let's go to the cash flow statement. Cash flow, can you see? Company has to generate money from its operating activities. And there was negative in 2006. 2007 onwards, the company has started generating good cash from its operating activity. And you can just see here what's happening in the cash from investing activity. There is a minus sign, right? So let's see what's happening. So when there is a minus sign in the cash from investing activity, it is supposed to be fine. Why? Because what are they spending money in? They are spending money in purchasing fixed assets, right? You can see they have been consistently buying fixed assets. Fixed assets are being sold, very negligible. Capital required for work in progress, they don't need much. Investment purchased, they've been done all the purchasing. Investment sold, nothing, right? So this is cash from investing activity. And what's the cash from the financing activity? It is minus 152, right? So all put together, all put together, they are still having a net cash flow of 3 crores. So we must have some kind of a cash flow left after all, after the cash from operating activity, cash from investing activity, cash from financing activity. You should have some kind of cash in hand, and that shows you whether a company is cash rich or not, right? Look into the compounded profit growth, almost there is nothing. And compounded sale growth, for 10 years it's negative, 5 years it's also negative, 3 years also negative. And return on equity, for 10 years it's about 13%, 5 years it's about 5%, and 3 years it's minus 76%. But what I'm saying, that if you look into the cash of this company, it is very, very rich. After this, what I do, I go to the money control, right? I go to moneycontrol.com and find out what's there, what is the holding of this company, who are interested in this company. So let me write HEG. So we go to HEG and we go to the shareholding pattern and see what's happening. You can read the financials, you can read the annual report, you can read everything out here. So see here, the promoter stake is about 61.06%, which is fine because promoter stake should be definitely more than 50%. Then there are 20 mutual funds which are interested in it. Financial institutions 9. Insurance companies 4. 44 qualified foreign investors are interested in this company, right? So now go to the mutual fund holding and you will see how this, the stock has been performing. If you see in this quarter, the holdings of mutual funds have gone up, right? Last quarter it had gone down, but this quarter's the mutual funds have increased their, uh, their holdings. Let's see who are the top public shareholders into the company. So there are, Life Insurance Corporation. You can see here, New India Insurance Company. You see Pacific Management Private Limited, Non-Indian Residents, NRI, Trusts, IEPF. All these people are interested in this particular stock. So when so much of people are interested into the stock will definitely perform good. So see, these are the block and the bulk, block deals that have happened in HEG. So you can see here, Citigroup Global Markets Mauritius have bought in 2008. Then again Mauritius has bought in 2017. They've sold it. Then DB International Asia Limited have bought HEG. Vanguard Group have bought HEG. So you can see the block deal and the large deals also. You can have a look at them. Yeah, you can have a look at the large deals that are happening in HEG. So there, I'm sure in a minute the dates will also come here. But see, there is huge quantity is being traded in this particular stock. Right? Huge quantity is being traded in this particular stock. So I think this is where you will be able to figure out everything about a stock. Let me take you to another stock, which, let's say Sai Baba. You get a lot of, Sai Baba. Sai Capital, Sai Baba Investment. Right? Look into Sai Baba Investment. Right? How much is the capital? Market cap 61 crores. Never deal in a company which is less than 500 crores. Stock PE is 180. Wow, means you spend 180 rupees to get 1 rupee profit. Current price is 5 rupee 44 paisa. Book value is 1.23. Face value is 1 rupee. 52-week high was 57 rupees and the low is 5.55. Means right now we are at the 52-week low. Right? Company is virtually debt free. That's the only plus point this company has. Though the company is reporting repeated profits, it's not paying out dividends. Right? Company has low return on equity, which is 6.1% for the last 3 years. Look into its peer groups. Adani Enterprises. PE, look at the PE. Sai Baba has 180. The rest of them are 2 digits. Even many of them 1 digit as well, right? And look at the market cap. Look at the market cap of these companies. Adani Enterprises 13,500 crores. Redington 5258. Kushal roughly about 2,000. Competent Auto 170, Veritas 455, Kothari Products 429. This is only 61 crores, right? Dividend yield nothing, net profit negative, quarter profit variant minus 125, sales is only 0.05 crore, which is 5 lakh, right? 5 lakh rupees sale. Imagine, look at the sales from 2000 March 2015 till December 2017. Just 34 lakhs, and it kept on reducing, and now it's only 5 lakh. Profit expenses. Look at the expenses which are more than the sales. And what sale? If you look into, any small shop, their sales are more than 5 lakh rupees in a month at least. Operating profit margins are in negative, right? Basically, there's nothing in it. Sales, there is barely any sales out here. Expenses are there. Operating margin, I don't know. It's a very, very sad balance sheet. There is no work which is in progress. Total liabilities are 14 crores. Share capital and the reserves borrowings. They don't have borrowing, but that doesn't make it very attractive. Look at the cash from operating activity, always negative. Would you like to invest in such a company? I don't think so. I will invest. I'm not interested. I will find out fundamentally strong companies. Now let's check Sai Baba at Money Control also. Sai Baba, Investment and Commercial Enterprises. Right. So let's see what's happening. How is the shareholding patterns and everything? Let's look into it. So there is nothing that I can see here, like there is no shareholding of promoter and anybody. There's nothing. It's a very funny balance sheet that I can see here, right? So shareholding pattern is not very clear out here, right? There is nobody here. Individual shareholders holding nominal shares, capital exceeding 1 lakh rupees. There are so many shareholders, that's about it, right? So let's see if we can see something, mutual fund holding. I doubt you will find anything in the mutual funds holding. There's nothing. Yeah. Top public shareholders. So there are, this is LLP. Total number of shares. Karan Dattatreya Walke. All these people are holding shares, but according to me, I don't know. What does it really mean? Promoters holding. Let's see what's promoter holding. There is nothing. No data found. Right? So these kind of companies are actually fictitious companies, and I don't trade in them. Let's look into TCS. Right? Tata Consultancy Services. So look at the market cap, 6 crore 68 lakh 832 crores, right? Current market price, book value, P. Look at P, just 25, right? And company is virtually debt-free. Company has good return on equity, and company has been maintaining a healthy dividend payout, which is about 38.88%. But con is that it's trading at 7.85 times its book value, right? So look at it has the highest market cap, even bigger than Infosys, HCL, Wipro. From each of them, it's got at least, Wipro or Infosys, it's about 2.5 times bigger capital. From HCL Tech, it's about 4 times higher capital. Tech Mahindra, it's almost 10 times higher, bigger company, right? And all these factors you can check. Look into the sales. There has been a consistent growth in the sales. Look at it, right? Expenses are also growing, but the operating profits are increasing, and even operating profit margins are increasing, are stable, right? And look at the operating profits year on year basis. Look at it from 5 crore in 2007, it has become 32 crores in 2018, right? And let's look into all these are fine. Appreciation, net profits have also grown. Let's look into the borrowings. You see the borrowings are also decreasing, right? Such a huge cash rich company. See the reserves, they have become 10 times from 2007. 2007 it had 8,752 crores. Now they have 85,000 crore reserves. The company can survive for years, if it doesn't have any sale. Look into the cash from operating activity, 25,000 crore, cash being generated. And here, let's look into the cash from investing activity. They've been purchasing fixed assets all throughout, and fixed assets sold, there's barely anything, and the capital used in work in progress, nothing. And investment purchased, their maximum money is going into purchasing the investment, right? And net cash flow is about 1,286. It's a huge cash flow that the company is maintaining, right? It's a cash rich company. Okay, and this money that they have as surplus in reserves, they have to give to their shareholders in the form of dividend, right? So companies sales are growing, the profits are growing, return on equity is very good, 30%, right? And let's look into the dividend yield. It's about 1.43%, not bad, right? So this is a cash rich company. This is a cash rich company. Into Infosys. What's happening in Infosys? So the market cap is 2,59,900 crores. Current market price is roughly about 1190. Book value is 297, right? Company is virtually debt free. Company is providing good dividend. Company has been maintaining healthy dividend payout, right? And the company has reported poor growth. Promoters holding is low, right? Now you can check Infosys has lower PE. That means you need to spend lesser money to get 1 rupee, earn 1 rupee. Then we go on to the sales. Sales have grown 14,000 crore to 18,000 crore, right? Operating profits have also gone from 3,760 to 4,900, right? And profit before tax, earlier it was 4,200, now it's 5,000. And sales have grown drastically. I want to see what's happening to their borrowings. Borrowings are almost zero. There is no borrowing at all. They have huge reserves, 65,000 crores, right? Either the company has to use this in paying dividends, or buying back its shares. And you must have heard Infi has bought back its shares from the market in the past. So you can look into what's happening into cash from the investing activity. So basically they were purchasing assets, now they are not purchasing any fixed assets. Sold nothing, investments sold. They have sold so much of investments, right? Investment purchased are this, right? So what I'm saying here, although they have created a lot of cash from operating activity, but they have invested cash from they have actually they have purchased the investments, right? So there are huge numbers in negative right now, but the company is cash rich in the form they have a huge reserves. They have huge reserves with them, right? So I need to check why there are these two negative huge numbers. What implication do these numbers have, right? I mean, I'm not sure about it, but I need to check, right? If you have, like, you people know about it because you guys are better, understand balance sheets. I would like to know why these two numbers are negative. here, you can go to the screens and you can find out, I would like you to find out companies which are at the 52-week low and which have solid which are rock solid as balance sheet. So what I want you to do is find out companies which are 52-week low, right? Low or lifetime low, but strong fundamentals, right? We will analyze those balance sheets and see if we could invest strong fundamentals, right? Or we will figure out how do we invest in them, right? So you find out the stocks which are, beaten out because of some news, because of some wrong news. They are beaten out. Find out such stocks which are at the lowest of their, you know, period, which are at the lowest of their values, right? Sorry. So what you can do here, you can go and find out, low PE and high EPS, or you can find out, 52-week low. You can go somewhere here. I'm sure you will be able to find out stocks which are basically on the 52-week low, right? High growth and high rate of high ROE, low PE, right? Undervalued companies. You can see which are those companies. PE is just 5. LSID investment has no PE. Current market price is 20 and this is 5 rupees. Market cap is 12 crores. This is I don't want to trade in them. So let's not look into it. I want at least 250 to 500 crore companies. Let's see high dividend yield shares. And let's organize them with a market cap. Infosys is the, or maybe let's, Infosys is the highest IOCL, market cap is highest HCL, Power Grid, Vedanta, BPCL, like that. You can find out and you can check which has got the, profits, how are the profits, how are the sales, and from there you can figure out the good companies. You have many screens here and you can make also a lot of screens. Show latest screen. So if I look into it, I am looking at market capitalization factor is more than 7, EV by EBT is less than 30, market capitalization should be more than 200, return on equity 20%, growth, profit growth should be 15%, operating profit should be more than 0, price earning should be less than 100, and G factor should be more than equal to. So you get these some companies out here, right? You can organize them with their market cap. So Interglobe Aviation, you have Avanti Feeds, you have Mahanagar Gas, Wakrangi, VST Industries. A lot of them you will get, and you can see which is, where would you like to invest by looking at the fundamentals as well as by looking at the by looking at the fundamentals and the technicals. So showing results of value bargain for 52-week low. So these are the companies which have, their current market price close to, their 52 weeks low. Like for example, Uniforce Enterprises, GMDC, Shanti Gears, Castrol India, Ambuja Cement, Rallis India, Reliance, DB Corporation, Supreme Petrotech, Petrochemicals, Bharti Infra, Reliance Infra, Clariant Chemicals. These are the ones which are, close to their 52-week low. And from here you can check which company has good fundamentals, and then you can look for entry into them. Now what I have done, I have made a list of good companies with good fundamentals, and I will be sharing them with you, what you can do with them. Later on you will understand the strategy of 50 SMA and 1 hour time graph. Just buy those strong fundamental companies, by investing, by, like for example, one of the fundamentally strong companies, India Glycol. So every time it gives you a buy signal on 50 moving average, enter into it just here. Forget about volumes, forget about everything. RSI positive, the price is going above 50 moving average, enter into the stock, take an entry at 460, and where will you go, where will you exit? At 575, just in few days, right? So an exit whenever, like these are buy only stocks, buy only stocks. So buy only when they enter, when the 50 moving average goes above, 10 moving average goes above 50 moving average, and RSI is positive. An exit when the price goes below. Again enter when price goes up. Keep such 7-8 stocks on your radar. Like I have shown you, these are my stocks where I enter like this only. HEG I entered like that only. It's a fundamentally very strong company, and my entry came in 1 hour from here at this point, 262700, and see where it is right now at 3632. Right? Just keep these and exit whenever your stock goes below 50 moving average. Enter whenever it crosses 50 moving average, exit whenever it comes below 50 moving average. That's the simple strategy you need to apply for fundamentally strong companies. Okay. So with this, I'm signing off. I would request you to read a lot of bank statements, a lot of profit and loss statements, and watch other videos also, because I can say with confidence that I'm not a master on reading profit and loss, and the balance sheets. I only look for certain factors, but I want you people to be good into reading balance sheets. Even I would like to know from you guys if something I need to also monitor in looking into the balance sheets. All right. So with this, I'm signing off. I'm take me from balance sheet point of view as a layperson, right? I don't really know much about balance sheet. I would need your inputs about balance sheet. How do you really make it out that this company is going to grow later on in future? All right. One thing I know, it should not have debt, and it should not be, borrowing should be low, and the money should be generated by operating activities. One more company I want to see for you is RCom. Let's see how is it different than other. So RCom, the market cap is pretty good. The current price is 10 rupees. Book value is 90 rupees. So it's trading way below its book value, right? And look at the pair companies. Market cap of Bharti Airtel is definitely very huge. PE is also very huge for Bharti Airtel, and RCom and all don't have any PE. Let's look into the rest of the parts of RCom. The sales have declined massively, 1/5. 2015 it was 5,694. Now it's 1,144 crore only, right? Then operating profits have become negligible, even negative sometime, and now negligible. Operating profit margins have also gone down, right? There's barely anything. Expenses are as it is. Expenses have also gone down, but definitely the sales have drastically gone down. From 17,000 crores sale in 2007, it has now been just 10,000 crores, right? Operating profits are negative operating profits, right? And see, borrowings, let's look into the borrowings, and here is the other income, right, which has also gone down. Now let's look into the borrowings. Oh my god, huge borrowings, 49,000 crores. Such huge borrowings, what will you do? Like the companies, it's much higher than companies market cap. The borrowing market cap is 2903, and the borrowings are 49,000 crores. Huge borrowings, right? So how do you think they will repay such borrowings? Right? So borrowing is definitely a huge concern, and nobody who understand market will invest into it, right? If you look into the borrowing, it has been stagnant, and rather it's been growing, because interest itself is growing every year. If you look into 49,000 crore as the borrowing, if I take a very broad, view of 10% interest, so that only itself going to be about 5,000 crores every year, right? Every year. Do you think they'll be able to pay? Total liabilities are 1,02,397 crores. My God, huge liabilities. And the cash from operating activity is negative. So I do not want to invest in this company. And look at it, fixed asset purchased, right? That's negative. Fixed assets sold. They've sold fixed assets, right? The company, to run their daily needs, they are selling their fixed assets. Sign of being very, very weak in their fundamentals, right? So hope you can understand a little bit that I understand, and you can decipher between a good company and a bad company, right? I've given you the homework. You scan through companies, find out the rock bottom companies which are at the 52 weeks low but fundamentally strong, right? I want at least 5 such companies from each of you, right? All of you find out. Let's put together all our energies and figure out strong companies with which are at the lowest of their either lifetime low or the 52-week low, and then we will invest into them, right? Some small amount, 1,000 rupees, 2,000 rupees, 5,000 rupees, and then we'll see how it grows over 2 years, 3 years, 5 years. We will see how the growth happens. So this is what I wanted to share about, balance sheet and profit and loss, although I may not be very good in it, but what I understand and what I look for, that I have shared with you guys. So we'll see, but you have to do a lot of work. You can go to the screens and you can figure out various, screens here. The bull cartel, right? The companies which may have good growth, right? So here you can figure out with respect to whichever way you want to do it, market cap, or you can see the 52-week high, 52-week low, or whatever you want to do. You can basically go to the screens and figure out the screens, various screens, and figure out from there. Zero debt companies, Safal Niveshak 10 years, you can go here and find out, which are the companies, what are the screener here. Sales growth should be growth 10 years more than the 10, and profit growth 10 years more than the 12, operating profit margin 12 more than 12, debt to equity ratio 0.5, current ratio 1.5, Altman Z score 3, and so you get only these 12 companies. Analyze them, and the simple I have told you simply what you need to do. Look for the 50 moving average breakout and invest in the company. I'm going to give you a list of companies which are rock solid fundamentally. All right. So let me sign off, but please work a lot on your profit and loss statement. You must know companies' fundamentals, and we would like to invest in the companies which are at the lowest of their price, but fundamentally very, very strong. They will give us a good spurt within next 1 or 2 years. All right. Bye-bye.